I'm David Lynn, Head of Investment Research at Altair Advisors. I hope everyone is having a safe and healthy winter season so far this year, and I know we're all hoping for a more normal spring and summer ahead. Today, I would like to share with you some brief takeaways from our quarterly commentary. So I know the markets have gotten off to a pretty rocky start here in 2022, but this really follows an exceptional year in the markets in 2021, which also had very unusually calm markets. And we just want to remind everybody that volatility is normal, and you're going to have these sharp pullbacks like we're seeing now, even in the midst of bull markets. And so we're very constructive on 2022, and we think that it's going to generate positive returns given that we have a pretty healthy economy. Corporate earnings are pretty strong, the labor market is recovering, consumer savings are high, and spending is really good. So the global recovery from the pandemic's impact is still really on track, and we believe it's going to withstand the challenges from COVID, inflation, and tighter monetary policy. Inflation has risen to a 4-decade high because of supply chain delays, Omicron-related economic disruptions, and higher wages. And while inflation is unlikely to drop materially in the first half of this year, we are seeing signs that inflation is going to moderate, particularly in the back half of the year, because there are several categories that experience very high price increases that were COVID-related or due to the reopening, such as used car prices and truck prices. These appear to be peaking or soon will peak. And while we certainly acknowledge that the biggest risk in markets and the economy this year is inflation staying higher throughout the entire year, we're really in the camp that anticipates inflation will start easing gradually, especially as bottlenecks lessen and more workers return to the labor force. The Federal Reserve is phasing out the emergency measures it put into place during the pandemic. And this really reflects the economy's strength and really shows that it no longer needs the monetary policy support. Now it's really up to the Fed to keep its planned interest rate hikes to a pace that won't either derail the economy or the bull market. And last year, the Fed waited patiently for months with the expectation that the surge in inflation would fade. It did not, but the concern now is that an overly aggressive series of rate hikes to overcompensate would certainly be a mistake. But based on the statements and track records of Fed officials, we believe that the tightening that is likely to begin in March will be handled prudently. And we believe the Fed would likely pause rate hikes if the economy started to show signs of strain. All told, the recovery from the pandemic remains a work in progress. We acknowledge that COVID isn't going away anytime soon, and inflation and rate hikes likely pose the biggest risks in 2022. But the economy is strong, and we don't see the recent market sell-off as signifying broader weakness. You can find our full commentary on Altair's website. Thank you for watching.